Here is a number that should stop you. 43%. That is the first attempt pass rate for CFA Level 1. And the single biggest differentiator between who passes and who re-registers. Not derivatives, not fixed income. Ethics, the 15% section that experienced finance professionals fail at higher rates than recent graduates. In this lesson, you will learn exactly why and how to make ethics your highest scoring section on exam day. The exam tests exactly one thing in ethics: judgment. Not memory, not recitation of rules. Judgment about what a CFA professional does in an ambiguous real-world situation. Here is the paradox. Experienced finance professionals arrive at the exam with years of training in their firm's compliance framework, and that framework actively conflicts with CFA standards in 3 critical ways. Your firm says compliance approval is sufficient. CFA says compliance approval is necessary, but never sufficient. Your firm says disclosure cures conflicts. CFA says some conflicts require avoidance. Disclosure alone is not enough. Your firm follows local law as the standard. CFA requires whichever bar is higher, law or standards. Professional experience is misdirected expertise. That is why it fails you here. Let me show you the 3 gaps where industry training actively works against you. First, compliance approval. In the industry, if compliance signs off, you proceed. Under CFA standards, compliance sign-off reduces your legal liability but does not discharge your personal obligation to exercise independent judgment. Second, disclosure versus avoidance. In the industry, disclose a conflict and you are compliant. Under CFA standards, gifts that create a reasonable question about your independence must be declined. Disclosure does not make acceptance permissible. Third, the law as the standard. In the industry, legal equals ethical. Under CFA standards, the law is the floor and the standards are the ceiling. When local law is more permissive, you follow CFA. Always. These 3 gaps explain why experienced professionals fail. They are applying the right instinct to the wrong framework. For context on the stakes, 27. That is the number of ethics questions on CFA level, 1 out of 180 total. Here is what makes ethics different from every other section. CFA Institute uses ethics performance to adjust borderline scores. A candidate who scores just below the passing threshold can be moved to a pass if their ethics performance is strong. The reverse is also true. A candidate who scores just above the threshold can be moved to a fail if their ethics performance is weak. For the roughly 40% of candidates who sit within that borderline zone, ethics is not just 15% of the exam. It is the entire margin of pass or fail. Let me show you what happens when compliance frameworks override independent judgment at scale. In 2007, UBS AG's fixed income division began accumulating subprime mortgage exposure. Compliance approved each transaction. Risk models showed acceptable figures. Every step was legally documented. By 2008, the exposure had grown to over $37 billion. Internal analysts who raised concerns were overruled. Management cited compliance sign-offs. The result: $38 billion in write-downs, a Swiss government bailout, a $780 million SEC settlement for selling fraudulent mortgage-backed securities to clients. Here is the CFA parallel. Every person involved technically followed internal procedure. CFA standards would have required them to exercise independent judgment despite compliance approval, and to dissociate from the transaction if they could not resolve their concerns internally. The most common wrong answer on Standard 1A questions is, the compliance department approved it. This is the exact failure mode that cost UBS $38 billion. Now let us build the structure you need to navigate any ethics question. The 7 standards of professional conduct are organized in priority order, and that priority order matters for the exam. Standard 1, Professionalism. This covers knowledge of the law, independence and objectivity, misrepresentation, and misconduct. It is the broadest standard and the most tested. Standard 2, Integrity of capital markets. This is where material non-public information and market manipulation live. Standard 3, Duties to clients. Loyalty, prudent judgment, fair dealing, suitability, performance presentation. The most substandards of any standard. Standard 4, Duties to employers. Loyalty, additional compensation, supervisory responsibilities. Standard 5, Investment analysis. The diligence and communication standard. Standard 6, Conflicts of interest. Disclosure, priority of transactions, referral fees. Standard 7, Responsibilities as a CFA member or candidate. Conduct that reflects on the profession. Memory hook, 3 letters in CLI for Standard 3 clients. 4 letters in BOSS for Standard 4 employers. The exam tests the III versus IV distinction directly. Before the quiz questions, let us cover the single most misapplied concept on the exam. Mosaic theory. Most candidates think they understand mosaic theory. Most are wrong about exactly one thing, and that one thing costs them the question every time. Mosaic theory says you can combine publicly available information with non-public information that is itself non-material to reach an investment conclusion. That is legal. That is encouraged. Here is the line the exam tests. The moment the non-public component is material, meaning it would move the price if disclosed, mosaic theory does not apply. No amount of additional public research cleanses a material non-public information taint. Think of it this way: non-material non-public is a valid mosaic tile. Material non-public poisons the entire mosaic. Thomas Muller overhears executives discussing disappointing earnings not yet disclosed. He did not solicit the information. He was not part of the conversation. He must not trade. Passive receipt of material non-public information carries the same restriction as active receipt. The exam tests this distinction directly. Quiz question 1. Maria Gonzalez, CFA, works as a portfolio manager at Apex Asset Management. Her firm's compliance department has reviewed a new municipal bond offering and determined it is suitable for retail clients. Gonzalez personally believes the offering has undisclosed risks. According to the CFA Institute Standards of Professional Conduct, Gonzalez should most likely A. Follow the compliance department's determination, since they are the designated risk authority. B. Express her concerns in writing to her supervisor and compliance department, and if she remains uncomfortable, dissociate from the transaction. C. Refuse to participate and immediately report the firm to the relevant regulatory authority. The correct answer is B. Here is why A is the most dangerous trap. Candidates from finance backgrounds are trained to defer to compliance. In the real world, compliance approval is the final word. On the exam, it is not. CFA standards require Gonzalez's independent judgment regardless of the compliance department's determination. C is wrong because external reporting is a last resort. Internal escalation, dissociation, comes first. External reporting without exhausting internal channels is not the most appropriate response. The pattern: compliance approved, it is almost always a wrong answer on Standard 1A questions. Quiz question 2. David Chen, CFA, is a sell-side analyst covering semiconductor companies. A portfolio manager at a client firm takes Chen and his colleagues on a 5-day fishing trip to Alaska valued at approximately $4,500. Chen's employer has a policy permitting gifts up to $500. According to Standard 1B independence and objectivity, Chen should A. Decline the trip. B. Accept the trip, but disclose it to his employer and in his research reports. C. Accept the trip since it is client entertainment, not a gift, and entertainment is treated differently under the standards. The correct answer is A. Option B is the disclosure fixes everything trap. When the gift clearly exceeds the employer's explicit policy, $4,500 versus $500, disclosure does not make acceptance permissible. The employer policy violation is a separate issue from the independence question. Option C is the entertainment reclassification trap. Candidates who know there is a travel and entertainment carve-out try to relabel the fishing trip as entertainment. The entertainment exception applies to normal business entertainment. A multi-day luxury trip is a gift in substance regardless of the label. This question contains two traps simultaneously. That is characteristic of hard ethics questions. Identify the employer policy violation first. It eliminates both B and C immediately. Quiz question 3. Sandra Lee, CFA candidate, is preparing a research report on a healthcare company. She uses 3 paragraphs from a Goldman Sachs sell-side report without attribution and incorporates her own analysis throughout the rest of the report. Her client finds the report valuable. Has Lee violated any CFA standards? Yes, Lee has violated Standard 1C misrepresentation by plagiarizing Goldman Sachs' work. B, no, because the majority of the report is her own original work. C, no, because as a candidate rather than a charter holder, Lee is not yet bound by the full standards. The correct answer is A. Option B rests on the assumption that a small proportion of plagiarism is below a materiality threshold. There is no materiality threshold in the plagiarism standard. Any unattributed use of another's work is a violation regardless of proportion. Option C is one of the most commonly missed questions in candidate surveys because the misconception is genuinely widespread. CFA candidates are explicitly bound by the code and standards from the moment they register for the exam, not from the day they receive the charter. The Standards of Practice Handbook states this explicitly. Do nothing is always wrong. Candidates are always subject. Attribution is always required. Memorize these 3 absolutes. Here is your exam day cheat sheet. Pause and save this. The strictness rule: always follow the higher bar. When local law conflicts with CFA standards, follow whichever is stricter. Law is the floor, standards are the ceiling. The do-nothing heuristic: do nothing is always wrong on ethics. When you see it as an option, eliminate it immediately. This single heuristic is worth 2 to 3 correct answers on a typical exam. Compliance approval: necessary but never sufficient. Independent judgment is non-delegable. This is the trap in Standard 1A and the failure mode in the UBS case. Disclosure versus avoidance: minor conflicts within employer policy, disclose and proceed. Material conflicts that compromise independence, decline, not disclose. Mosaic theory boundary: only applies when the non-public component is non-material. Material non-public information poisons the mosaic, no defense. Fair dealing equals equitable, not equal. Pro rata or systematic allocation is fair. Arithmetic equal shares is not required. Standard 3 versus 4. 3 letters in CLI for clients, 4 letters in BOSS for employers. Candidates are always subject. From the day you register, not the day you receive the charter. Code equals 6, standards equal 7. Never confuse these 2 numbers on a structural question. Three exam day strategy rules that apply to every ethics question. Rule 1: read the stem twice. CFA ethics questions use precise language. One changed word changes the answer. The difference between must and should, between most appropriate and technically permissible, is the difference between the correct answer and the trap. Spend the extra 10 seconds. Rule 2: identify the hierarchy before you answer. Ask 3 questions in order. 1. Whose interest is primary in this scenario? 2. What does the CFA standard require, not what would the employer prefer? 3. Is there a conflict between law, employer policy, and CFA standards? If yes, follow the strictest. Rule 3. Apply the process of elimination rules. Eliminate, do nothing, immediately. Treat, report to regulators with suspicion if an internal escalation path exists. Eliminate any answer that cites compliance approval as the final word. After 3 eliminations, the correct answer is almost always the one that preserves independent judgment through the least disruptive intervention available. Ethics is not the section you survive, it is the section you master.